Hi everyone. Today we will discuss 8 tax credits that you could take this year, which are Earned Income Credit, Child and Dependent Care Credit, American Opportunity Tax Credit, Lifetime Learning Credit, Child Tax Credit, Savers Credit, Small Business Healthcare Tax Credit, and Excess Social Security Tax. So, what is a tax credit? A credit is a dollar for dollar reduction in your tax. For example, if you're in the 22% tax bracket, a deduction for $100 saves you only $22 in tax, but a credit of $100 saves you $100 in tax. Earned income credit. The amount of the credit an eligible individual may claim depends on whether the individual has one, more than one, or no qualifying children, and is determined by multiplying the credit rate by the taxpayer's earned income up to an earned income amount. In order to claim the credit, an individual must either have a qualifying child or meet other requirements. A qualifying child must meet a relationship test, an age test, an identification test, and a residence test. Now, there has been some changes which relates to the disqualified income test for the earned income credit itself. Disqualified income is a sum of taxable and tax-exempt interest, dividends, net rent and royalty income, capital gain net income, and net passive income that is not self-employment income. Moreover, the disqualified investment income threshold, which an individual is not eligible for the credit, is $3,600 for 2019. The earned income credit must be claimed to be received. In effect, it is a form of negative income tax, that is, a refundable credit for taxpayers who do not even have a tax liability. Child and Dependent Care Credit. If, in order to work, you incur expenses in connection with the care of certain dependents, you are permitted a child care credit for those expenses. This credit, unlike the earned income credit, cannot reduce your tax liability below zero. That is, it is not refundable. To qualify for this credit, 1. Your child and dependent care expenses must be incurred to allow you to work full-time or part-time, whether for others or in your own business. Work even includes actively looking for work. 2. You must have income from work during the year. Unpaid volunteer work does not qualify. 3. You must maintain a home in which you and one or more qualifying persons live. This means that you and your spouse, if you're married, pay more than half the cost of maintaining your principal residence. Work-related expenses cannot exceed either the $3,000 limit for one child, $6,000 for two or more, or your own or your spouse's earned income, and you must use the smaller earned income in your computations. Now, if you qualify for the credit, complete Form 2441, Child and Dependent Care Expenses, and attach to Form 1040. American Opportunity Tax Credit. The American Opportunity Tax Credit, which is AOTC, is a credit for qualified education expenses paid for an eligible student for the first 4 years of higher education. Graduate students are not eligible. You can get a maximum annual credit of $2,500 per eligible student. If the credit brings the amount of tax you owe to zero, you can have 40% of any remaining amount of the credit up to $1,000 refunded to you. You will receive a tax credit based on 100% of the first $2,000 of tuition and related expenses, including course materials and books, paid during the taxable year, and 25% of the next $2,000 of tuition and related expenses paid during the taxable year. This tax credit is subject to a phase-out for taxpayers with adjusted gross income of $80,000 to $90,000 or $160,000 to $180,000 for married couples filing jointly. Lifetime Learning Credit. The Lifetime Learning Credit is a tax credit used to offset the cost of tuition and fees. Room and board do not qualify. It can help eligible students pay for undergraduate, graduate, and professional degree courses and courses taken to acquire or improve job skills. There is no limit on the number of years you can claim the credit. The amount of the credit is 20% of the first $10,000 of qualified education expenses or a maximum of $2,000 per return. The Lifetime Learning Credit is a non-refundable credit, which means it can only reduce a person's tax liability to zero, and no part of the credit can be issued as a refund. It is a per family, not per child credit, as is the American Opportunity Credit. You cannot claim a credit for each student. For 2020, your income must be $69,000 or less, $138,000 for joint filers, to claim even a partial credit. You need a 1098-T form from the college to claim either the Life Learning Credit or the American Opportunities Credit. Now, only one of these credits or deductions could be selected per student: the $2,500 American Opportunity Education Tax Credit, the $2,000 Lifetime Learning Tax Credit, the $4,000 above-the-line deduction for education expenses. The American Opportunity Education Tax Credit, with maximum of $2,500, is the best of these three because it is a higher credit than the Lifetime Learning Tax Credit, with a maximum of $2,000, and a $4,000 deduction provides at most $1,480 in relief if you're in the 37% bracket. Child Tax Credit. Present law provides a $2,000 tax credit for each qualifying child under the age of 17. A qualifying child is one you claim as a dependent. The $2,000 credit may be partially refundable up to $1,400. As of 2018, you get a $500 non-refundable credit for dependents who are not qualifying children, such as aged parents. The credit is phased out on a joint return earning more than $400,000 and for singles earning more than $200,000. For every $1,000 or part thereof earned, the credit is reduced by $50. Savers Credit. In order to stimulate savings, Congress gives you a credit of up to 50% on the first $2,000 you put away in a traditional or Roth IRA, 401k, or other qualified retirement plan. So if you contribute $2,000, you will get a $1,000 credit. It's not available for those under age 18, full-time students, or dependents claimed on another tax return. The Savers Credit rate is based on your adjusted gross income, or AGI, for the taxable year for which the credit is claimed. Unfortunately, to get the 50% credit, your AGI cannot be more than $19,500 or $39,000 for married filing joint. Small Business Health Care Tax Credit. If you are a small business that is offering health insurance to your employees, you might be eligible for the Small Business Health Care Tax Credit. To be eligible for the credit, you must have purchased coverage through the Small Business Health Options Program, also known as the SHOP Marketplace, have 24 or fewer full-time equivalent employees, pay an average wage of less than $54,200 a year. This amount is indexed. And pay at least 50% of the cost of the employee health care coverage for each employee, not including their families. For tax years beginning in 2014, the maximum credit increases to 50% of premiums paid for small business employers. To be eligible for the credit, you must pay premiums on behalf of employees enrolled in a qualified health plan offered through a Small Business Health Options Program marketplace. The credit is available to eligible employers for 2 consecutive taxable years. Even if you did not owe tax during the year, you can carry the credit back or forward to other tax years. Also, since the amount of the health insurance premium payments is more than the total credit, you can still claim a business expense deduction for the premiums in excess of the credit. You use Form 8941, Credit for Small Employer Health Insurance Premiums, to calculate the credit. Excess Social Security tax. If you work for 2 or more employers during the tax year, too much Social Security tax may be withheld from your wages. You may claim this excess amount as a credit against your income tax. The tax consists of 2 parts. First one, Old Age, Survivor, and Disability Insurance, or OASDI, and second, Medicare Hospital Insurance, or HI. For 2020, the rate on OASDI is 6.2%, or 12.4% if self-employed, and on HI it is a 1.45%, or 2.9% if self-employed. Starting 2013, there is a 0.9% Medicare surtax for those with earned income of more than $200,000 or $250,000 on a joint return on the excess over these amounts. Your Social Security tax obligation is computed each year by applying a fixed rate to your wages. There is, however, a maximum wage base, which is subject to change, to which the tax may be applied. For example, in 2020, all wages in excess of $137,700 will not be subject to the OASDI Social Security tax. There is no cap on HI. Therefore, if you work for, say, 2 employers earning $137,700 from each, both employers will take the maximum OASDI, which is 6.2% times $137,700, or $8,537 from your wages. But because you're only liable for the maximum payment of $8,537, you can't have a credit against your income tax for the additional $8,537 subtracted from your wages. This is money you should get back. Even if you owe no taxes, excess Social Security payments will be refunded to you. In other words, a refundable credit. Well, thanks for watching, and if you like this video, subscribe and give it a thumbs up.